I mean, because really, like I said, it really is going to come down to the terms. So maybe he could like FaceTime. Okay. Some depth there. Okay, fantastic. That'll work. So we'll. Okay, no problem.
Fireflies. I just love the fireflies.
Yeah, definitely. Yeah, definitely. No problem. No problem. If he can FaceTime, as long as they can talk, right? FaceTime like would probably be ideal. That would be great. Yeah. We'll have to decide what lowball is. Okay. All right. I have to.
Hello, Chad. Hello, Fireflies.ai. All right, there we go, guys. We got Jake Meller in the house. We got Clint Cox.
What's up, Jake?
Hey, how are you?
Hi, Rebecca.
What's going on? We got Pierce York live in the person here. In case anyone's wondering what's happening, welcome. We got everyone coming in here. We got Mr. Chad Wold. Welcome, Chad. We got Fireflies.ai. Still waiting for them to join us on the real name, real person, but we're so glad they're back. I want to welcome everybody. To the BSC Mastermind. We got Pete coming in. Let's give it another minute here, and then we'll officially get started. Review. Okay. Right, Jake, you're looking good today, as always. Looking rested. The hair is on point. Chad, your hair is gonna rival Mr. Jake Miller's for the most interesting hair in the world here.
There we go. Yeah, got competition now.
Yeah, and then Clint, you're in last place for sure, brother, because the hair is gone. Rebecca, your hair beats us all because you're a woman and your hair looks great. So keep that up.
I'm just fine with no hair. It's a lot easier.
All right, sometimes last place is the best place, man. I mean, you know,
First or last.
it depends what you're shooting for on the hair thing. So, well, cool. Hey, everybody, we're gonna get started. So, for those who are tuning in or watching us live on YouTube, we are very passionate about helping people defer capital gains tax using something called a deferred sales trust, especially if you're looking to exit cryptocurrency. And so we like to say around here that most people, they feel, you know, they're crypto millionaires, or maybe also real estate millionaire or business millionaire. You feel trapped by capital gains tax when they go to sell, and it's somewhere between 30 to 50% of your gain being wiped out by capital gains tax depreciation recapture. And so we use a deferred sales trust to give you tax deferral, liquidity, and diversification, so you can create and preserve more wealth, or help your clients do the same. We are shooting live here, by the way, in Colorado. How's my sound, Jake? There's a lot of noise in the background. Are you guys hearing that? Does it sound bad? Give me a thumbs up or a thumbs down, because we can also relocate.
It's mostly okay. I mean, when you're speaking, it comes out clear, your voice and everything else. It's when you pause and don't say anything that we hear some of the background.
Okay. We might take this over to another table, because all of a sudden they got the guys that are putting out the dishes for the lunch, and they're probably going to kick us here in a minute. But so yeah, with that being said, we want to also, I want to introduce Business Partner Strategic Alliance and Financial Advisor Extraordinaire, Jake Meller. Jake, we are in Colorado, closer to you, potentially in Utah. So how far is Utah, how far is Price, Utah from Denver, Colorado?
It's about 5 or 6 hours if you drive real speedy.
Excellent. If you were,
Yep. And if you don't have any, if you don't hit an elk, and if you're not caught in a snowstorm, it might change to about 13 hours if you get caught in a snowstorm, but otherwise 5 to 6 hours.
Very good. And would you give us a little bit of the vision for why we're here? So for those that are joining us for the first time.
Absolutely. So we're here to discuss all those people, such as those that have crypto, or those that are selling an apartment, or those that are getting stock options, anybody who otherwise has a highly appreciated asset, and you're going to have a transaction where you're selling that asset that would otherwise be taxable as a capital gains tax. We're helping those people strategize, and we customize this deferred sales trust in such a way that we can help that transaction be a non-taxable transaction for you. Now, everybody's situation is a little bit different. In fact, more and more, we've been talking with people who've had failed 1031s, or that have tried something else, and they had, whether it was a good or a bad experience, they're looking for more flexibility or the ability to reinvest in any type of asset or have control over timing. And we're helping them have a better experience with a deferred sales trust so that they can essentially have control over timing as well as control over what they reinvest in and when. So I think that's the vision for why we're here today, talking about
That is a great mission. And by the way, we're going to do a little ad lib here. We're going to be doing a little deferred sales trust man on the street. Hey, Steven, do you have a second here? I want to introduce Steven. Steven, we're live right now on YouTube, Facebook, and with some other friends. Steven, say hi.
Hey, what's going on?
So, Steven, can you tell us just a little bit about you and what's your biggest frustration with the 1031 exchange?
Well, my name's Steven Pesavento of Investor Mindset and Von Finch, and closed about $15.5 million last year in equity, and about $4 million was from 1031 exchanges. And I think one of the most frustrating things about it is that the individuals who are in the exchange have to take much more of an active role in getting the deal closed, providing financials, signing documents, and they're really in more of a risk position. Although the 1031 is great when you're coming in as a syndicate, when you're coming in from a syndication perspective, it's the actual act of getting there that can be a pain. For example, we have a deal right now, we're in the middle of closing, raised about $9.5 million, and we have to get a bridge-to-bridge loan in order to get that deal closed to protect the 1031 exchangers' money. Now, we're great operators. Wasn't our fault that the closing was delayed, and nor should we be penalized for it, but we're making that internal decision to protect them. But frankly, not all operators would do that. Not all operators would protect 1031 clients the way we do. So that's one of the big risks I think people don't really think about.
And Steve, what would you say? You're just getting introduced to the Deferred Sales Trust, right? And we're going to be doing a little breakout session here later on. But what's the one thing that's most exciting for you about when you hear about the Deferred Sales Trust?
I think what is exciting about the concept behind it is understanding that there's other options available. That if people are in a failed 1031, if people are selling a business, they're exiting, they have a huge gain coming, that there's some options available that they can essentially defer those gains to a better day, to a better time to take those.
Fantastic. Well, that's Steven. Steven, where people find you if they want to find you?
Head over to investormindset.com or search Investor Mindset on your favorite podcasting app or on YouTube. Come check out the kind of content we put out. And if you're interested in investing, head over to vonfinch.com/invest.
Thank you, Steve, for stopping by. All right, so that's one of our new strategic alliances, and we're doing a breakout session. So I thought I found him on the street. Hold that, Mr. Pierce.
You got it, guys.
And we're gonna actually shift this. Do you guys like that? Do you want me to find some more people like? You guys want me to find some more people like this? You guys can kind of be a part of this conference. Is that cool? Can you give me a thumbs up for that? We're trying to find another random person, semi-random. We've been networking with people all week, or all last couple of days, and let's see what we can find. In the meantime, I do want to tell you about the deal close story of the week, and this is out of. Let me push mid here. This is out of. We talked about Colorado. Oh, this is out of Texas. No, we had talked about that one. Although, I'll remind people that one closed. It was a $15 million deal. But what's cool is they had a turnaround immediately of another deal they wanted to buy for $1.7 million, and they had to close that with the trust. So setting up the operating agreements, the LLCs, that was it closed on the other end with the trust. So I think it's really important to remind people that once you're in the trust, you can buy deals tax deferred in partnership with the trust, and that's pretty amazing. And we turned it around. Within a couple of days of the wire hitting the account, we turned it around into escrow with an operating agreement with our team and with their team, and that was big for them. He has another $120 million in escrow, or set to close, and then by June, which is also very exciting for us. And he only met us 4 weeks ago. so things can move quickly, but we're always trying to improve our systems. And sorry, it's going to be loud here for a second. So give me 1 second as I walk through this. We got people coming in. Maybe let's find Julie here. We got Julie here. Hey, Julie, I'm sorry to interrupt. Do you have a minute for me? That we're live on YouTube right now. Can you come over? Sorry, we're back in a minute. Yeah. So, Julie, we're here with some friends, and we're at the Best Ever Conference. So,
Hey,
Julie, we're all kind of curious. You're in the real estate world. You do podcasts, you do syndications, and you're a rock star mom and businesswoman.
Thank you.
What do you think the biggest frustration is when it comes to 1031 exchange?
The 1031 exchange? I think the biggest frustration that I've had as a syndicator is that I need a large sum of money in order for it to make sense in my syndication. And so a lot of people are exchanging, and they might be new to the multifamily space, and they're exchanging, doing the 1031, and they don't have $500,000 or $1 million to bring to the table. And then I run into that. Is it worth it? I'm just being transparent. Like, is it worth it for me to go through the legal paperwork and documents and things like that?
So yesterday I spoke on the Deferred Sales Trust and the ability maybe to exit cryptocurrency. Crypto millionaires are looking for a little more, passive or active role in real estate, and do that tax deferred. So what's the most exciting part about the Deferred Sales Trust for you?
I'm sorry. I heard the talking over there. The deferred what?
The Deferred Sales Trust. So I spoke about that yesterday, where you can exit cryptocurrency into real estate, all tax deferred. So someone has millions in crypto, but they don't know how to get it to you until it's taxed. But with the Deferred Sales Trust, that bridges that gap. So what do you think that opens up for you for opportunities?
For me, it opens up a lot of, personally even, it opens up opportunities because I love crypto. But for a lot of people that they bought in on their crypto and they have that, I love that, they can leverage it now. I mean, that's taking crypto to an entirely new level where, hey, now I can do something and continue to build my wealth and diversify my wealth through my crypto investment. It's extraordinary.
Amazing. And people want to learn about you, Julie, and what you do. Where can they find you?
Oh, thank you. Yeah, Julie Holly, 3 Keys Investment, host of The Conscious Investor. So head over to julieholly.com. That's where I'd send people.
Awesome. Thanks, Julie. Yeah. All right. So that's it for right now, everybody, in regards to the man and woman on the street. And so with that, I want to hold on. I'm live. What's going on?
They got an awesome thing over here going on.
Pierce is going to take over for a few minutes.
Hold this. So before we get on this, Saif, nice to meet you.
You
How's
as
it going,
well.
bud?
What do I gotta tell them?
Yes, say your name and what you guys do.
Saif Siddiqui, principal of Divergent Capital Partners based out of Michigan, looking for multifamily assets and blend buy sells for triple net leases.
Awesome. And what is your biggest struggle with capital gains tax?
Capital gains tax, to be honest with you, most of our stuff, we are legacy holders. So what that essentially means to us is we're buying stuff with the intent of keeping it forever, right? What we do with investors essentially is we're looking to provide as much value as possible, execute our business plan within 3 years, pull all the capital out, and now you're in the world of infinite returns.
Nice. So with your syndications, do you guys have people that are doing 1031s that come in with syndication money that you turn away?
Yeah, we have plenty of folks that are trying to do 1031s and aren't able to do them just because currently we're a 506B raise and we're not looking for 1031 capital.
So with the Deferred Sales Trust, did you know that you could, in fact, now you can capture that equity coming in from those people using the Deferred Sales Trust instead of the 1031?
That's something that we've got to have a conversation about. I heard some of those great details. I know Nate spoke with, I think, Brett on the right of me here. We're super interested in it, and I know there's a bunch of people that could benefit from it and even benefit us as a sponsorship group.
Awesome. Well, we're really excited to have you in that room today at 5:15. Awesome. Pass out a flyer for you.
Thank you very much.
Where can they find you? Where can they find you?
They can find us at divergentfund.com. You can email me as well at saif, S-A-I-F, at divergentfund.com.
Sounds good. Thanks so much.
Thank you very much.
Appreciate it.
Okay, now we're back. So now we're gonna focus on you guys. So I just thank you for hopefully that was pretty cool. I'm going to open it up for questions from anybody today. So give me a second to get to a place that's not as loud. But Jake, I want your feedback. Any thoughts from what you guys just experienced?
Well, I mean, fun and exciting. You're at a conference with real people. This was on the spur. This wasn't, staged or anything like that. Sure, you're having conversations with a lot of folks in the real estate world who are experiencing capital gains. And it was great to actually get their on the spot impromptu impression and experience on what they've been through with 1031s or what they've been concerned with in real estate transactions, things that sometimes are a stumbling block in changing from one asset to another. And so I think this experience that you've just given us made it real, helped us understand that professionals in the space that do this every single day, what their concerns are and what sometimes kills a deal, right? So how can the Deferred Sales Trust be a solution and a facilitator for a lot of these transactions? I think that's what we talk about every week, every Friday. Here at, I don't know, what time is it? It's 11 o'clock Mountain, 10 o'clock Pacific, 12 o'clock Eastern or whatever.
1 p.m. Eastern? Yeah, exactly.
1 o'clock Eastern, yeah. Sorry, getting all the time
Excellent.
zones in there.
Rebecca, any feedback or thoughts? And Rebecca is one of our strategic alliances. She's out of the Truckee Lake Tahoe Luxury Realtor. And in fact, she sent me a referral this week. By the way, thank you, Rebecca. But we'll talk about that deal in a minute. But Rebecca, any feedback or thoughts for the Deferred Sales Trust?
Feedback or what were
Questions,
you asking?
thoughts, feedback, yeah, all of the above. Just anything that's going on in your world there.
Yeah, no, I love that you're at a conference right now. I'm planning on going to a conference in a couple of weeks. So I love the prompting questions that you're asking. So that triggers what I'm going to need to do to ask people what their challenges are with 1031 exchanges and investments. So I love that. Yeah, just moving forward, excited about connecting with more people about the Deferred Sales Trust and just opportunities for them to deal with capital gains challenges. So.
Excellent, fantastic. And in my talk yesterday, it was cool. I got to speak on stage in front of about 1,000 people, and it was a total honor. It was like a bucket list, and I was talking. And I want to encourage Rebecca, right? Because you're learning about this still. It's been about 6 months or so now that you kind of dived in. When I first got started, I cold called Joe Fairless, who's the head of Best Ever Real Estate, like the #1 podcast for commercial real estate. And this is like one of the top conferences. And I remember going like, man, if I could just get the message out, like if I could just grab their attention for a little bit, if I could just get on stage and educate people the power of the Deferred Sales Trust, it would be amazing. And so I remember cold calling him, nothing, right? In fact, it's like, I don't have his cell phone. It's just like a corporate number. Cold emailing him, nothing. But it wasn't until I started creating content and closing deals, right? But also going on podcasts that I actually started to get that traction. So it's like what I say is you're only one Deferred Sales Trust deal away. Like that first one can change everything. And you being in the luxury real estate market in Tahoe, Truckee, we're gonna help you. We're gonna do it together. I'm gonna help you, and you're gonna close that first one, and then we're gonna be able to leverage that to help, from a $5 million deal to a 10 to a 15 to 20 to $30 million deals on the lake. That's the vision for what I have for all of our strategic alliances, but especially those who are passionate and are specialized in their luxury space or wherever they might be. And that could be cryptocurrency, that could be real estate, that could be business. And it's us as a team to help people understand the power of the Deferred Sales Trust, why it works, why it's legal, and execute this. And so with that being said, thank you for that referral. The referral that Rebecca said to me, her friend or colleague happens to be selling a house with her husband, and they are very excited to taking the next steps. It's not a done deal, but let's just say they are in the process of discovering the Deferred Sales Trust, spent some good time with them. And what they said, and it was interesting, was, Brett, I watched hours of your videos, right? Hours. And so this is part of why we're trying to provide content even right now so that people can consume it on their own pace, at their own terms, and then come to us to educate or break down their specifics. But my point is, I want to encourage you, Rebecca, or anyone else. I know Mr. Chad Wold, I'm going to have him introduce himself here in a second, because he's also serving ultra high net worth clients actually in Colorado. And so he's going to talk about here in a minute. My point is, creating content and the ability to do this can help people consume. It can be overwhelming for those. So that being said, thank you, Rebecca. And I'm excited for that one to close, and then us to be able to leverage that, because you're still a part of that deal, right? Because of the referral, and you've also educated her on the front end a little bit as well. So thank you for that. But any thoughts on that, Rebecca, before I get Chad in here?
I can tell you that they're really excited about the process, and they've got detailed questions, but nothing that'll be a challenge. And I come across people like these clients all the time, and so I'm excited to create content. I'm really starting to work towards that. Getting more comfortable on video is going to be probably one of my bigger challenges, but I'm excited about that. So yeah.
Fantastic. Well, I want to welcome Chad. And Chad and I, just a quick background, known Chad now, we've been talking with Chad for I think about 3.5, 4 years now. And so we first got introduced at a conference actually up in Washington, and connected well there. And then we kind of both got busy, and then we just kind of reconnected about 4 months ago. That being said, Chad is a rock star attorney, super, super sharp, and I'm really excited to bring him in as a strategic alliance. So Chad, do you want to give a little bit more of your story and your focus, and maybe how folks can the folks that you work with, how you serve them?
Sure. Yeah, thanks. Nice to meet everyone virtually. Chad Wold, attorney. I started a law firm about 10 years ago that we've built out nationally, and full service law firm in 15 states. We just opened Scottsdale, Salt Lake, and Jackson Hole in the last 90 days. And Jackson Hole servicing our high net worth clients there from all over the world. I'm currently based in our Whitefish office in Montana, which is also home to multiple high net worth individuals. And I was really blown away the first time I heard Brett speak and about these solutions, deferred tax solutions, which I hadn't heard of. And we were shaking our head as to why we really hadn't heard of it. And it's just a lack of content, lack of education out there. So the more we explored it and looked at it, it seemed like a perfect fit for what our clientele needs, particularly in two realms. One is real estate. We have a lot where we are currently. The real estate market in Montana is through the roof, and we have second home buyers and people that are selling businesses at multiples that would just blow your mind, and they don't have any like kind exchanges in 1031 to put it into, one, and two, they don't know what it is. And so I'm really excited to re-engage with Brett to create some more content and educational introductory pieces for the clients, one, and more importantly, what I have found the biggest hurdle to be is once I get a client educated on it, the bigger hurdle is their financial advisors and CPAs who, if they don't know anything about it, then it's a horrible idea and it's the devil and run away. So it's almost starting with the CPAs that I know in these particular areas that are dealing with these high net worth individuals and getting them educated first before sending the clients to them and saying, oh, okay, yeah, this is a legitimate
yeah, that's phenomenal. And by the way, I'm so sorry for those who are in Montana. I didn't mean to say that Chad was from Colorado. I know that's a big difference. And, I got 5 kids and 2 podcasts. And so Montana, yes, Montana, such a beautiful place and a lot of high net worth individuals. So we want to share that. By the way, Chad, I'm so excited to introduce you to Jake. I don't know if you caught this, but I don't know if I gave him the proper introduction or the better introduction. And Jake is we call him the CPA whisperer, but he's also a financial advisor, and he's amazing. And I think this is great for you guys to connect right now, but also offline as well, because he is serving as a deferred sales trust financial advisor. He's with Capital Gains. He's a part of the Capital Gains Tax Solutions strategic alliances, and he has an amazing background of helping CPAs understand different tax strategies. I want Jake to share that, and also Jake, help connect with the biggest challenges for the CPA and the financial advisor to be on the same page, because what Chad brought up is an important point, right? You want that team to feel great about whatever tax strategy you're doing. So would you talk about how you differentiate yourself and how you've come to become an expert with the Deferred Sales Trust, Jake?
Well, that's a lot. But anyway, essentially, I think what Brett's getting at is we play well with other professionals. Oftentimes, as you mentioned, Chad, there's a competition mentality where sometimes people are very secretive and they don't want to share and they don't want to work with other professionals and things of that nature. And we've had some great successes overcoming that in a lot of different ways amongst associations and as well with various groups of people, so that we can get the attorney, get the insurance person, get the investment person, get the CPA all on the same page and help everybody come together. Can you guys still hear me? My video is doing something strange right
Yes, we can still hear you. Yeah, your video is stalled out. It faded to black because what you're saying was like so amazing.
I know, right? It just kind of like faded away, but
Coming in loud and clear on my, is everyone else audio good for Jake? Thumbs up for Jake. The audio is loud and clear. It's just the EOS webcam utility, but keep going, Jake. Just go ahead and finish your thought there.
yeah, I'll just cut some of it short. And I guess Chad, recently this week, one of the items that we're helping a CPA with right now, and this is perhaps interesting, but maybe you can opinion on this real quick. What I guess one of the ways that we customize the Deferred Sales Trust to really provide a solution for some of our clients in various situations. We have a hotel client who has a mortgage over basis issue. Now, can you kind of explain what the mortgage over basis issue is? And then Brett and I will jump in and kind of show how the Deferred Sales Trust mixed with some other financial tools and instruments can solve that solution, solve that problem.
Do you want me to or Chad to? I couldn't tell, Jake.
I would love Chad to opinion
Chad,
on
are
that.
you familiar with the mortgage over basis?
Okay,
I'll do
no,
it.
my apologies. Well, mortgage over basis, this has come up maybe 3 or 4 times this week where and sorry, I didn't mean to put you on the spot there or anything, but essentially somebody, so there was an equipment rental business. Think of it like an A1 rental. They rent out backhoes, they rent out big equipment, right? They make a lot of money and they're going to sell their business for about $30 million. However, their CPA was really good and informed them that the tax ramifications of selling their business, this is similar. This isn't a mortgage over basis. This is a depreciated asset concern, but it's similar in nature in how we solve what's going on. Essentially, all the callback depreciation alongside the sell was going to make this a dramatically higher taxable event. And so when they're thinking, well, I've got so much basis in my business and I'm going to sell for this price, at the end of the day, I'm going to walk away with some equity. And then they realized that with all the callback depreciation, it wasn't going to be as, basically it was a huge hurdle in them selling their business. Another client that we discussed with a hotel, they have so much basis. Let's say they have $2 million basis. They have, let's say $8 million mortgage and a $20 million sell. All right. So with those numbers, they have an issue if they were to receive an economic benefit by rolling something over and not rolling over the debt with it. In the sense of we have what's called boot. And if anybody just wants to Google boot, you can find out that if you have a decrease in your debt, then there's an economic benefit that becomes taxable. Now, part of the solution is to combine 2 different strategies, a 1031 for the debt only, and then the Deferred Sales Trust for the proceeds of the sell. That way there isn't we're not erasing or eliminating the debt, but we've put the debt into another instrument and we've deferred we have deferred what would otherwise be a realized economic benefit to the client by erasing or paying off the debt. Does that make sense? And we've rolled over the gross proceeds into the Deferred Sales Trust that then can be used as a financial tool in the future for making new deals. Anyway, saying all of that.
That's fantastic, by the way. And by the way, I want to invite anyone else who has questions, right? Jake and I have been talking a lot. So we got Adam, we got Aaron, we got Angie, we've got Clint, we've got Howard, Surinhar. Anyone have questions or thoughts so far? I know sometimes we can move really fast and we want to make sure that we make this super simple as possible, right? In our allotted time. So does anyone have any questions or thoughts so far that you'd like to have us covered about anything we've said or anything else about the Deferred Sales Trust?
This is Pete. I got a question for Jake. Jake, when the money rolls into the DST, we can earn interest on it. There's fees, of course, but nothing gets taxed until we use it. So if we buy another property or another XYZ, does it get taxed at that point in time?
The answer is typically no. And let me explain that, because there's a lot of different ways that you can utilize this financial tool or instrument. That's why Brett and I oftentimes hang out. What does that mean? We continue down the road with the client in their journey, right? So we're part of the DST while they utilize it in the long run to help provide ongoing tax efficient advice. What does that mean? So one scenario, we might help a client who has a DST, all the funds went into the DST, zero taxable transaction, everything's great. So they reinvest it, like you say. Well, if they reinvest it a certain way, we continue the deferral and there's not any taxes there. One example might be a joint venture relationship where the DST acts like a passive partner and there's another outside entity that is the operator, and the DST provides like a deposit on a multifamily home, and then the LLC goes and gets the lending. So you've got the 30% down, you've got the 70% from the lending arm, and the LLC now owns a new multifamily that the trust participated in. Does that make sense? And so that type of arrangement, and there's many other types of arrangements that could make sense based on the business venture, maintains a lot of the tax efficiency that the DST continues on an ongoing basis to help you reinvest.
And does the property get reset as far as depreciation?
That's one of the reasons, and Brett is phenomenal at real estate deals, by the way. I mean, that is his history, that is his passion. That would be his second love, just don't tell his wife. And, real estate, as you're pointing out, has some additional benefits, which is why you would do a real estate deal in a joint venture or a partnership arrangement, so that, I mean, you would not want the depreciation to flow into the DST, because why would you do that? It's already a tax favored vehicle. So you house it in the LLC that has a portion that is outside of the DST, so that the depreciation, so that you can take advantage of the new depreciation schedule outside of the DST to provide you tax benefits to you personally through the pass through of the DST.
LLC.
And
Sorry.
let me also clarify real quick, Pete, Jake, that was perfect, but also just so you know, we have to follow something that aligns with what's called business purpose and commercially reasonable. And part of that is you do get a new depreciation schedule. We have a deal with the client. He did a $2.6 million sale in Alabama, and he deferred all the tax. He had no basis, and he used the Deferred Sales Trust. And then he built, in partnership with the trust, just like Jake was saying, be an LLC, 72 multifamily units, okay? And that was a part of that investment to help build that project. And so to the extent that he is an active GP in an LLC, which he is on this deal, he's able to receive in proportion to his ownership of the LLC, which in this scenario was about 80% of that depreciation. The other 20 flows to the trust, and like Jake said, it doesn't benefit the trust in a sense because the trust is essentially a tax neutral position, and or it's operating at a loss anyway, so it doesn't necessarily benefit the client. But you do get a new depreciation, of which, Pete, you would get 80% of that if you are the active GP, which begs the question, well, what happens if I'm a passive LP and the trust just invests directly into an LP position? In that scenario, the trust would get that full depreciation, which wouldn't be as beneficial. So we do have to follow some guardrails, and it's not perfect, just like nothing's perfect, but it does definitely help people who are looking for new depreciation schedules if they're an active GP to get that. And then of course they can do what's called cost segregation. They can accelerate that depreciation schedule, and they can receive cash flow that is essentially in that given year, if you have enough depreciation or loss to offset that cash flow at no tax, which is beautiful. Does that answer the question, Pete? Or any other questions on that?
Yeah, it does. I'm just a little investor, but by the way, I'm working with Dora.
Yeah, I know. I do know that, Pete. Yeah, it's
Dua,
actually,
Dua. Sorry.
Dua, yeah, and she's one of our strategic alliances for the 1031 exchange, and which we give you that backup plan. So I appreciate that question, Pete. I want to, if you have any more, feel free to ask them, but I also want to open it up for anyone else that might have some questions. You can also put it in the chat as well if you're not comfortable coming on the video and or I do like that Bitcoin that you're showing there. That's big time. Is that a real Bitcoin? Is that worth like?
Oh, of course. Yeah, it's digitally in your mind.
Yeah. You want to share more about that, Pete? Your Bitcoin
Well,
exit?
one of my things is I have 3 or 4 IRAs that can do crypto, but I have more crypto that is taxable. So I'm trying to decide, well, do I kind of run it through LLCs in Australia, or, I mean, how can I kind of avoid some taxes besides moving to Puerto Rico?
Yeah, moving to Puerto Rico or giving up your U.S. citizenship, right? I mean, that's kind of drastic. We like to say we're the tax deferral strategy that allows you to have the freedom to live where you want to, not where you have to. You don't have to give up what's so dear to all of us as U.S. citizens. So, but that's honestly what some people are actually doing. And but yeah, if you don't want an alternative, you don't have to. So, any questions on that for the exit of cryptocurrency, Pete, that you want to stay?
Okay, can we get it into a DST and just push it? I guess, well, you either sell it or you don't, I guess. So,
question is how do we get into the DST? Is that your question?
Sure. Yeah.
Okay. So we'll actually give you the deal stories that have actually happened. So I'll do one, and I'll have Jake do the other. So the first one that was done was for a client who bought Ethereum and Bitcoin, and they lived in the East Bay area near San Francisco, and he worked for a technology company for 20 years, and he was an early adopter of Ethereum and Bitcoin, mostly Ethereum. He and his wife put about $100,000, and it went to 13 million. And so they had about a $12.9 million gain. So a huge tax. They didn't want to pay it. And so they wanted to defer it. So they found us. So step 1, we form the trust. Step 2, we open up with Kraken as our go-to right now, an account with the EIN of that new trust. Step 3, he was able to transfer from his cold storage wallet into Kraken, the Ethereum and the Bitcoin. Step 4, the trust sold it to cash, USD. Step 5, the funds are transferred to a bank account. So that's kind of the big overview. But the key is he didn't sell it directly to cash. Right. He transferred the coin to Kraken account in the name of the trust, which he does not own, in exchange for a promissory note that he can receive payments slowly over time and pay tax. So it's kind of like an IRA. It's kind of like a 401k. So to the extent that your coin is tradable on a major coin, like a Coinbase right. or Binance or Kraken, to the extent that it's transferable, that's super simple. To the extent that it's not, we have a different strategy, which involves an LLC assignment and an assignment of the LLC, which we can talk about a little bit here, but essentially we can also solve that. So that's the first deal. Pete, any questions on what we just talked? I just said right there.
No, that makes sense. We just got to follow the steps, right?
You got it. Yep. Jake, do you want to tell about the second deal with the Bitcoin client of ours?
Yeah, so we had a client that did incredibly well, and things went up really, really far. They didn't want to exit all at once. So maybe, what would that be? 1/12 of her portfolio, which 1/12 ended up being 5 to 6 million, was her first move into the Deferred Sales Trust. She wanted to test out, kick the tires, see how things work, everything else, and used 80% of that as a joint venture for a high school friend that had a passion for helping other people with education, things of that nature. They built an app that was phenomenal, that is helping people in India with, learning additional tools and resources for learning, school subjects and things of that nature if they need help. And she was able to do that and help a old high school friend with their business and a joint venture because of the DST. They were able to move the crypto, just similar process to what Brett explained. We create within the trust, we have the entity set up in such a way that we can open up an account with Kraken and everything else, transfer some of the coin into that wallet that is held within the trust, sell it out, and then the proceeds of which she has some in marketable securities right now, which is a diversification from everything that she had in Bitcoin before. And then the rest of it is in this joint venture, of which when Bitcoin goes up again, she'll probably be liquidating more of that and moving it over and diversifying into other assets. And so absolutely, the Deferred Sales Trust can work with crypto. The Deferred Sales Trust can accomplish your goals of moving into a property or an asset that is not like kind, You can diversify into other types of asset classes, such as crypto, marketable securities, anything really, business interest that can be considered an asset. And Brett and I can help navigate those waters for you to accomplish your goals and objectives. And, you know, it's something that not in every scenario have we done things before. So we're here alongside helping you figure things out. I think the very first crypto account, Brett, I mean, we're trying to open up digital wallets in the name of the trust at a lot of different places. And we found a few that are easier to work with than others.
Right.
And that's specific to the crypto space. But then again, there are people receiving stock options right now, dealing with a client that has warrants, and those warrants, they're warrants on a stock. The company that in question that the warrants are a derivative of their stock is going through a reverse merger. And because the reverse merger triggers a provision in the warrants, those will be immediately exercised into the stock of the new company after the reverse merger. That is a very interesting thing, because now the client can't just exercise the warrant when at the timing of their choosing. It's being forced on them. They're going to get a big old 1099, essentially $105,000 is going to turn into around $2.6 million. And they're looking for a solution, something that can help them not have that huge tax burden all at once, and not lose the value of their rights or their warrants to the stock.
Perfect, Jake. Thanks for sharing. That's amazing. Pete, any follow-up questions on that? Or are you good right now? You thumbs up still?
I'm good right now. I'll let other people chime in.
Excellent. We got Clint. Any thoughts, Clint, Aaron, Adam, Angie, Fireflies.ai, Howard, Surinder? Any questions or thoughts? Again, you can put them in the chat. You can also unmute your mic and ask away. We are here for you.
I have a question.
Sure.
So I've come across a couple of flippers that basically buy homes, fix them up a little bit, and then sell them. And they don't really qualify for a 1031 exchange because they aren't necessarily investment property. It's more of a business. Would the Deferred Sales Trust work for this or not?
The answer is yes, as long as they have a qualifying asset.
Income.
Yeah. So
Say that again.
The answer is yes, as long as they have a qualifying asset. So as long as it's a $1 million net proceeds, $1 million gain. In fact, the deal we did last week in Texas was exactly that. It was an assignment of sale. Okay, well, they had got it under contract, and literally the same day that they were buying it, the trust was immediately buying it from them and immediately selling it to another buyer. Okay, and then so the answer is yes, as long as it's qualifying. Now, if they are considered a dealer, meaning they're doing so many of these per year, it could change. It does change the nature of this. In that sense, it might be if they're going to be selling their business of the dealership business, then we could exit it. So the answer is always it all depends on how they've structured it and what they're doing. However, generally speaking, if they're doing a couple of deals like this per year, and they're not in what's called dealer status, and it's just a large enough transaction and it qualifies, which is $1 million net proceeds, $1 million gain. The answer is yes. Does that make sense, Rebecca?
It does. Yes, it does. Yep. Perfect.
And so if it's considered inventory versus, a capital gains type sell, there might be some other technicalities that need to be massaged to make it work.
Okay. I don't understand the difference between inventory and capital gains, but I'm sure you can explain that if we get to that point.
Yeah, I mean, with a client in that type of position, if the volume is so high, just bring us in and we can look at it on a very case-by-case scenario.
Perfect. Thanks, Jake.
All right. Who else? Who else has questions, thoughts? Put them in the chat or unmute your mic and we can ask away.
Yeah.
Comments. It doesn't have any questions. You can just like, hey, that's really cool. We appreciate the encouragement, or wow, where can I learn more? Or whatever. And it's everybody, by the way. We got Chad, Angie, Adam. This is anyone who wants to jump in.
So I've got a question.
Yeah, go Clint.
So if I've got some crypto that is earning, I'm sure you've heard of staking, and you're earning like an interest off the crypto and stuff. Let's say that I might want to keep that there and not cash out everything. What would you do with that? Or does that matter where it's kind of like an interest earned? Would that be all right just personally? How would we handle that? Or would I do what Jake said and put that within the business, an LLC that I've set up?
So that's a little bit different. Again, we have to have a qualifying transaction to have a DST set up, right? What you're talking about with staking is kind of similar to having a rental property. You're talking about the rents that are coming in, or a preferred stock where there's dividends that are coming in. And we would have to be selling that position out, and we would need it to be, $1 million or more or whatever, having most of it be, capital appreciation, something of that nature, so that we could get it inside of a deferred sales trust. In the future, you could repurchase that position. You could repurchase that same, you could stake it again in the future.
So after it's been put into the deferred trust, then I could repurchase and restake.
Correct. Yes.
And that would just earn interest for the trust. Correct?
Yes. And in fact, we wouldn't have to be so complicated like we get with real estate and other things. The crypto itself, we could be transferring inside of an entity that manages the wallet that is owned by the Deferred Sales Trust, right? And then internally, we sell out of the position, and then kind of what we call in the investment world, we could rebalance your holdings, and you could buy that position again. And then, of course, the appreciation or the income generated just continues to stay inside of the wallet, which is under an LLC that is owned by the trust.
Okay. Thanks.
And so that's how you retain the income that's being generated from the interest and everything else, and reinvest it within the trust. And I say within the trust, under the trust umbrella, because it'd be the trust and then the LLC, then your wallet.
And Clint, in crypto, you can sell and buy the exact same thing immediately without any problems, but you can't do that with stock.
No, I get that. I was just wondering if I could leave it there or if I would have to sell out of it, which I kind of figured I'd have to sell out of it and then put it right back in. So I was just wondering on that.
And of course, we could always go back to the attorneys that draw up all the documents for all of this and just confirm with them that would be the method that they would provide their blessing on, so to speak. And of course, they're looking at securities laws. They're looking at a lot of different things just to make sure that everything is compliant.
Great question, Clint. Thank you so much for chiming in. We got another question coming in on the chat, and it's from Mr. Srindhar, I think I pronounced it. It says, inside DST, can the funds be purposed from single-family investment gains into multi-family investments? And the answer is yes. And so the beauty of the Deferred Sales Trust is that it's agnostic in the sense of where and how the funds can be invested once it's in the trust, meaning it doesn't have to be like kind, although in this scenario, it actually would be like kind, because you could sell out of it a single family home if it was an investment property and 1031 exchange into an investment property. Which also begs the question, well, what if it was a primary home and it wasn't an investment property? Well, guess what? The Deferred Sales Trust allows you to eliminate the 1031 exchange, sell a primary high-end home, move it into the trust, of which the proceeds can then go into an LLC with you to go purchase multifamily real estate. It can be passive or active. And so the ability to diversify is the strongest, I think. I mean, it's one of the tenets. There's a lot of strong points, but it's arguably right now the strongest reason to use the Deferred Sales Trust, to sell high and diversify. Of course, it's tax deferral. That's number one. Without that, we're not even here. So we got to defer that tax. Then we got to get some liquidity, some diversification. And then the last part, which makes this thing an absolute home run, is called optimal timing. So hopefully you're buying that multifamily property when it makes sense for you, when you can negotiate a deal, when you can structure a deal. And that could take 180 days. It could take 2 years. In fact, the biggest prolific deal in the history of the Deferred Sales Trust, we call it the Monday morning quarterback. It's maybe one of the biggest that I know of. It's a gentleman who sold a property for $20 million in Minnesota in 2006. He sold and deferred the tax, moved into the deferred sales trust, and he waited on the sidelines. Now he put it in the stock market in the meantime, liquid investment grade securities, safe, conservative portfolio. So he didn't suffer the big crash hit. But guess what his real estate did? It did crash. In fact, the property that he had sold was foreclosed on by the bank, and the bank called him up and said, "Do you want to buy it back?" He said, "Well, maybe what's the price?" And he said, "Well, about 60 cents on the dollar from what you had sold it for." He said, "Oh yeah, to that crazy 1031 buyer, whoever paid, right?" Yeah. He goes, "Yeah, that sounds pretty good." So he had the trust, along with the trustee, reallocate the investments into an LLC, and he bought it back at 60 cents on the dollar, all tax deferred. Still hasn't paid any tax on it. Now he's paying tax on the cash flow from the property, right? To the extent that the depreciation doesn't offset the cash flow. But this is the beauty of the deferred sales trust. It gives you that option. So does that answer the question? And that was from Surinder, which is a great question. You can give me a thumbs up on the chat, or you could also chime in on the video here. I'm gonna think it does. Jake, anything to add to that? Or yes, it does. Thank you. Oh, great. Thanks for that feedback. Anything to add to that? And we are coming down to the wire here. So I'm gonna open it up for any other questions before Jake jumps in. Anyone else have any other questions for me, for Jake, about the deferred sales trust, about their cryptocurrency exits, or any other exits that they're planning on doing? We've got Angie, we've got Adam. We haven't heard from yet. We've got Fireflies.ai. We haven't heard from yet. We've got but anyone else too? Anyone else? Feel free to jump in right now. Okay, good. That means we did a good job today, Jake. Oh, here we go. We got one from Adam.
He's got a question. So, I'm going through a 1031 right now. And if things don't go, you get the 45 days, right? So when should we initiate or begin the DST transfer from the 1031 to a DST?
Jake, you want to take that one? Or do you want me to take it?
Day 41, day 12,
the sooner you are looking at different things, the better. And there's a lot of different reasons for that. Oftentimes, we're not saying that you're going to get in trouble for doing things last minute, but IRS, if they're ever scrutinizing something, a lot of times they go behind the scene and they try to decipher what the intent was. And so we're showing intent early on if you're looking into the DST before the 11th hour, if you understand what I'm saying. And so you're asking, when would the appropriate timing be? And the timing of it, to have a conversation and to maybe even talk to the tax attorney that puts this together and everything else, would be now. All right. Now, the tax attorney may say, well, let's give it, a couple of weeks, whatever. And if it's still questionable whether the 1031 and everything else is going to work, well, maybe it would be good to go ahead and get the trust set up and the paperwork, which is all done on a conditional basis, meaning the attorney and everybody else works for free, and you don't get billed, you don't get charged unless the trust is funded.
Sure.
And so, right now, if you're in the 45-day window, I would at least have the conversation with the attorney, make sure that he understands the entire picture of what's going on. And then he will probably dictate, like, hey, at this point, we should probably at least have the trust set up. And it doesn't hurt him to set up the trust. I mean, It's a little bit of work, whatever. But the big role of the attorney is the fact that they have a 100% track record. This trust has been reviewed or tested a few different times. And, if this were to be compared to the four-way inspection on a home, where an inspector, to justify their existence, they got to find something, there's got to be a finding, or there has to be a change requested. The IRS, and all the many times that they've tested the deferred sales trust, they have never come up with any findings that I'm aware of, and I've reviewed several different cases, and they've never had any change requests. And so it's a proven process with 100% track record, never been disallowed, never been requested that they change anything, never have they had any findings. With all of that being said, the trust attorney having them look at your deal in time helps ensure a good quality service, regardless of whether you move forward on it with this deal or a future deal.
Okay.
And so you're asking about timing. The timing is now. Have the conversation in a couple of weeks. If you still haven't, got the 1031 identified and selected, then let's, get the trust set up, and you still have time to not use the trust and no cost to you.
Right.
Unless, of course, it's a failed 1031 or something doesn't work out, then it's ready, it's set up, and it wasn't done on the 11th hour, and you're ready to go, and you can fund it. And you've got all your options open to you. We're all about the options, right? Making sure that you have choices that you can make up until the very last minute.
Okay. Well, I'm 10 days into it now. So I have 35 more days. So
We like to say about day 20, day 25, you're going to have a good feel for it, Pete.
oh yeah.
And then, and you're going to say like, this thing is crazy. I don't want to pay these 3-4 cap deals that don't make any sense. These sellers are outrageous. Let us know. We'll set it up in a couple of days. We'll get it all prepared. You're working with our qualified intermediary strategic partner alliance. So she's great. We just do these all the time. So thank you, Pete. That being said, I want to wind it down here. I want to open it up. Chad, if people want to get in contact with you, where can they find you?
You can email me, chad@gravisgrowth.com, GRAVIS.
If you're in Montana, look them up, and Chad will be coming back on. We're doing some educational content coming out. Rebecca, for people who want to find you, where can they find you?
They can find me they can email me at rebecca@rebeccamonson.com. That's MONSON.com.
And that's luxury real estate, and that's a Lake Tahoe, Truckee area. I'm also gonna, my business partner here, he's been on the shoulder all day, and he's been waiting to talk. I want to let you know he's a luxury specialist in Newport Beach, and also a commercial real estate deals down there in the Los Angeles area. Mr. Pierce York. Pierce, if people want to find you, where they can find you.
Pierce at kingdomluxuryrealty.com.
Fantastic. Jake Miller, extraordinaire, CPA whisperer, financial advisor. If people want to find you, where can they find you?
So you can find me. I have a landing page set up for strategictaxsolutions.com. You can book an appointment there, as well as there's an 800 number, 1-800-773-1848. And of course, here every Friday. And that's where I'd encourage that you come again and you just talk to both Brett and I and Pierce and Rebecca and Chad and everybody else. And amongst the panel of people, we make things happen.
Fantastic. Thanks, Jake. And people want to connect with me, go to capitalgainstaxsolutions.com, where you can subscribe to the YouTube channel, the podcast, and you can book a time to sit down for a consultation. Remember, $1 million net proceeds and $1 million gain is our minimum, unless you have 2 assets of more than 500,000. Unless you have cryptocurrency that we can also work with, because that's a little bit different. If you have multiple coins that we can, we're working on a $2 million deal for those who are wondering. She has 40 different coins. And so the exiting, we have a unique way to do that, but that's kind of the only unique asset that we can do that for smaller sizes than 1 million. That being said, go to capitalgainstaxsolutions.com. Please rate, review, subscribe. Please click that little bell on YouTube. Give us a thumbs up, a like. All that stuff helps to support the channel and the mission to help people escape feeling trapped by capital gains tax. Please invite a friend next week. Remember, 10 a.m. Pacific Standard Time, 1 p.m. Eastern, every single Friday. And we will talk to everybody soon. Thanks, everybody. Bye now.
Bye-bye, everyone.